Nigeria's economy grew by 3.84% year-on-year in Q4 2024. This was the highest growth since Q4 2021, when the economy grew 3.98%, and also faster than 3.46% in the previous 3-month period. Hello, welcome to Global Business Insights, where we look a little deeper at the main business stories. Today we start with a dive at the latest data on the Nigerian economy. For economic growth to be inclusive, it must be able to raise standards of living for a broad population and be growth that delivers social benefits, tackles inequalities, and reduces poverty. Growth must be broad-based, cutting across sectors where different job groups, pay grades, and levels are found. Looking at the Nigerian GDP data in Q4, the services sector remained the primary engine of growth, expanding by 5.37%, also making up 57.38% of total GDP. The sector was helped by growth in the financial services and insurance institutions and the telecommunications sector. The financial services sector, specifically the money lenders, have thrived in an atmosphere of high interest rates that has pushed up their margins, no doubt, helping them to be able to raise salaries to address the inflation. But other sectors were not as lucky. Growth in the interest rate sensitive industrial sector sank to 2% from 3.86% in Q3, and also in the labor intensive agricultural sector, growth slowed to 1.76%, down from 2.10%. In the oil and gas sector, growth collapsed to 1.48%, down sharply from 5.17% in Q3. Indeed, average daily crude oil production reached 1.54 million barrels per day in Q4, marginally up from 1.47 million barrels per day in the third quarter, but still below 1.56 million barrels per day in the same period last year. It is positive that in the year 2024, Nigeria's economic growth reached 3.4% compared to 2.74% a year earlier. But that growth was not broad-based growth. When some sectors like, say, banking shoot up as others like manufacturing shrink, you have a recipe for expansion in inequality. The 2024 growth rate, however, is also still a far cry from the 6% target set by President Bola Tinubu when he took office in mid-2023. President Tinubu has, however, implemented bold reforms to unleash the country's full economic potential, and we are seeing early signs of improvements. The 2024 data released yesterday was not affected by the ongoing rebasing, which is expected to push higher the GDP figure for the first quarter in 2025, as the new base year 2019 is used instead of 2010. The rebasing will factor in growth from hitherto underrepresented sectors like the marine economy, arts, culture and tourism, information and communication technology, and e-commerce, all of which have expanded significantly since the last rebasing in 2014. The last rebasing led to a spike in gross domestic product that made Nigeria the largest economy in Africa, but it has since falling back due to devaluation of its currency. The International Monetary Fund forecasts Nigeria's economy will grow 3.2% this year. But looking ahead to 2025, according to S&P and Stanbic IBTC Bank in their PMI Purchasing Managers Index survey, PMI fell to 52 in January 2025, slightly down from 52.7 in the previous month. But it was the second consecutive month of expansion in the country's private sector as new orders and business activity continued to rise. The PMI report also said that despite inflationary pressures, input costs and output prices rose more slowly than in December, with input price inflation at its lowest since April 2024 and factory gate charges increasing at a 6-month low. More good news was that business sentiment hit an 11-year high, driven by optimism for future output, though still below historical averages. There were signs of inflationary pressure softening in January. Analysts expect a moderation in the inflation rate in 2025, although the pace of the moderation is only likely to be faster in late Q3 of 2025. However, agriculture is still expected, according to the S&P IBTC survey, to lag the long-term average amid lingering internal security challenges, high input costs, and extreme weather conditions. The Central Bank of Nigeria, in their own inflation expectation survey, sees abating inflation, but not in the near term, holding back any remarkable growth till the second half of the year. The next big good news on the economy is likely the rebased GDP print, which could take GDP growth over 4% in Q1 2025 and provide evidence of a more broad-based growth in economic activity. We also just got rebased inflation down to 24.48%, not so far from the 15% target. Even better news from Nigeria, as the Securities and Exchange Commission announced a significant reduction in the time it takes for companies to obtain approval for offers, bringing the time frame from over a year down to just 2 weeks. Confirming the change in a statement released on Monday, the Securities and Exchange Commission stated that approvals would now be granted within 2 weeks once all necessary documents are complete, aiming to enhance the efficiency of the capital market and better support the development of Nigeria's economy. Now we are talking. Markets closed with the S&P 500 sliding for a fourth day after U.S. consumer confidence data was disappointing. The conference board's closely watched consumer confidence index fell in February to 98.3, the steepest decline since August 2021 and far worse than the 102.5 expected. The report also showed average 12-month inflation expectations up to 6% from 5.2%. Bitcoin was also below $90,000 in a risk-off move as it sank to a 3-month low. Apple boss Tim Cook says it may have to change its diversity practices as the US legal landscape shifts. This was minutes after a majority of shareholders rejected a proposal calling on the tech giant to consider ending its diversity policies. However, despite the vote, Mr. Cook yesterday acknowledged that the firm may have to alter some of its practices. Quoting Tim Cook, he said, as the legal landscape around this issue evolves, we may need to make some changes to comply. But our North Star of dignity and respect for everyone and our work to that end will never waver. Well said. AI market leader Nvidia stock was also down today as investors consider the potential impacts from new tariffs and new Chinese chip sanctions and other pressures. The tech giant due to report its Q4 performance after the market closes later today, and investors are nervous that results will not match the extremely high expectations that have been priced in. Also, DeepSeek heralding a lower cost structure for AI may have caught Nvidia and other big spenders by surprise. Further adding to the uncertainty were the recent wave of tech earnings and narrow misses by the cloud units of Amazon, Microsoft, and Google. Home improvement bellwether Home Depot's Q4 slightly topped expectations as the chain posted a 14.1% increase in revenue year over year to $39.7 billion. Earnings per share also grew to $3.13, up from $2.86 last year and above estimates of $3.04. Market expectations were low as shoppers held off on major renovation projects, and given high interest rates plus the more cautious spending overall. Kyiv was reported to have agreed terms with Washington on a minerals deal that Ukrainian officials hope will improve relations with Trump administration and enable a long-term U.S. security commitment. Ukrainian officials argued that they had negotiated far more favorable terms and said the deal broadens the relationship with the U.S. and forges an economic partnership which will be difficult for Putin to ignore. The UK also said yesterday that it was lifting its defense spend to 3% of GDP as Europe also ramps up defense spending, even as Macron and Trump seem to be mostly agreed on a plan for peace in Ukraine. South Africa Reserve Bank Governor Lesetja Kyanyaho, on the sidelines of the Group of 20 meeting of finance ministers and central bankers in Cape Town, has said global trade tensions and a potential VAT hike in South Africa could derail 2 years of slowing inflation. He also said uncertain trade conditions and retaliatory tariffs could tighten global financial conditions and affect South Africa exports.
Oh, there are all sorts of difficulties, and you can't always anticipate them. But one thing that is looming large had been the uncertainty, the elevated uncertainty that had been created by some of the trade measures that are taken by some of the major economies. When you impose tariffs, you expect that the other countries will respond, whether through tariffs or through some other measures. What is in no doubt is that an increase in tariff does impose a cost on the consumers of the country that is imposing tariffs. What that would mean is that the central bank have to look at the impact of the tariffs and say, is this a once-off shock that will get out of the system, or is this going to be a shock that leads to second-round effects in the price formation process?
The G20 summit has been overshadowed by trade disputes, with key figures like Japan's finance minister and U.S. Treasury Secretary Scott Bessent not attending. The African Renaissance narrative has to be independent of China or the US perspective or interests, and more importantly, robust to accommodate the simmering but unavoidable trade war between the two major powers. A lot has been already said on addressing the corruption and reducing dependence on aid for Africa, and doing more to advance win-win mutually beneficial trade positions at a time when the growth potential in Africa is a major opportunity for investors. Pursuing radical improvements in ease of doing business and competitiveness has to be top priority, especially for the main trading hubs. Just in, Germany GfK Consumer Index, a leading indicator of the level of consumer confidence in economic activity, decreased to minus 24.7 points in March from minus 22.6 points in February 2025. The reading was also lower than minus 21 expected. The US plans to offer a new gold card visa with a path to citizenship for $5 million. The new card replaces the EB-5 visas created by Congress to generate foreign investment, available to people who spend about $1 million on a company that employs at least 10 people. Asia Pacific markets mostly mixed, tracking declines in Wall Street benchmarks overnight after the latest US consumer confidence survey reading came in weaker than expected. Nvidia earnings out later today could also either deliver a blow to a nervous stock market or reignite a recently shaky AI rally. Nvidia is expected to report quarterly net income jumping more than 60% to $21 billion in the December quarter. Well, that's all we can take on this episode of Global Business Insights. You can watch us on BusinessDay TV YouTube channel Monday to Friday at 11 West Africa time. Thanks for watching. This is Bode Oshosami. Bye-bye.